I yesterday sent out an email regarding the financial analysis portion of your guys' project 2. And I've already kind of gotten one response, and it's understandable. I know people get confused about what it is they ought to be analyzing, and so I thought I'd send out a brief video here and maybe give you some examples or show you what I look for. And if you have questions, again, about your company, go ahead and ask. But what I'd prefer you do is ask a question that's related to, or that shows me that you've already studied your company and you studied the financial statements and you've taken a look at some things, and maybe your questions are, why this or why that versus I just don't get it. And so hopefully this will help lead you down there. So let's start here. First, I still kind of like Morningstar. They changed the way they're doing it, and they don't give us quite as much information. But I'm going to Google or Bing. I use Bing, but you guys probably mostly use Google. And I'll get to the Morningstar site. And from there, I'm going to click in. And the company that I've chosen is one that I've kind of thought about buying some stock in for the last several years, and I haven't pulled the trigger yet. I don't know why. I maybe should have, but it flies under the radar a little bit. It's J.M. Smucker. You can see some other companies there that I kind of like to look at, but J.M. Smucker, and their ticker symbol, and you guys, of course, know your ticker symbol. Theirs is SJM. Okay, and so I entered the ticker symbol, and it brings it up, and I can click on that. And that should bring up a brief quote, anyhow, about the company. Okay? And it gives me that right up here at the front, and it's a little bit slow getting all loaded, so I've got to kind of wait here, and then I'll scroll down a little bit. Here's the quote, right? It tells me what the price is, what it's doing today. Those things aren't very relevant. Price movement. So, as you're writing your paper, I don't care about those things. I guess in the end, if you make your recommendation, it might come into play there. You might say, hey, this is a good stock, but it's a little bit overpriced right now. That type of thing might be okay, but it's really not important for us in terms of our analysis because we're looking at the financial statements. Okay, we're looking at that, and right now we're not terribly concerned about the price. Again, it might come into play with your recommendation, but just briefly. So I'm scrolling down because I want to find this. I want to find the financials. And this is where I start my analysis. And I just kind of take a look, and I see that, it gives me the last 5 years. Okay, and it also does this year to date. Now, this can be a little bit confusing. We'll see when I click on the next one that for Smuckers, anyhow, their year end is actually April. Okay, corporations can pick different year ends, and they do that for different reasons. Maybe sometimes they just did it a long time ago, but in any event, their corporate year end theirs is April. Most corporations are still going to be on a calendar year from January to December, but some, like Smuckers here, they've picked a different time frame. And so, their year to date in this case is kind of close, okay, but not entirely there. I mean, that's why their sales, their revenue's down, because this probably just includes 3 quarters, right? And they've still got at least 1 quarter report. But in any event, I can look at 2017 and back, and so I'll start here and I'll kind of just do a little bit of looking. I'll go, well, here's their revenue. Well, look at that, 5 point. It dropped a little bit there, but not a big deal, and it dropped or went back up just a smidge there, but oh, look at that. Wow. It took a huge jump from 2015 to 2016. Boom. I've got something now, okay, that's a little bit different, that jumps out, and I kind of want to know why that happened, okay? And that's really important if you find some things like this. It's not to say that you don't still report on some of the basics. The basics here is from 2013 to 2017. Revenue increased from 5.9 to 7.4, roughly, okay? But here we had a big jump from 15 to 16. And we're going to have to figure out why, and we'll figure that out. But look at their operating income too. In billions. It went from, almost 1,960,000,904. Oh, it took a jump down here in 2015, and then it jumped way up in 2016. So there's a lot that happened here from 2015 to 2016. And I'm kind of interested. Look at their net income. 540 million, 560, down to same thing. Okay. So for my company, anyhow, I've found, something that jumps out at me that I need to report on. I need to figure out what's going on. Again, that's not to say that I'm not going to talk about some of the other basics about J.M. Smucker, because there's some other things that good things about this company that we want to take a look at. So sometimes the most difficult company, by the way, to analyze is a company that is just boringly good. Their sales go up a little bit every year. Their profit margins stay solid or increase a little bit. And they're just boring, and they're good, okay? And if you have one of those companies, that's going to be probably one of the more difficult ones to analyze, because you might not have something that jumps out at you like this, but there's still always good things in to report. Some companies, there's going to be bad things to report. So let's take a look, okay? What happens next? Well, I click on this all financial data, and I'm just going to jump over here because I've already done that, and it brings this up, okay? They used to give us 10 years. Now they only give us 5. But it still gives us a little bit more detailed information. And what's kind of cool about this is I can do some, this gives me this revenue and stuff in dollars, okay, and cost of revenue and some things like that, okay. But I can also click here and change that to percentages. And that's kind of neat, right? Because, I can take a look here and, look at their cost of revenue from 66 down to 61 in 2017. Okay, that's almost a year ago, right? Because that means their year end there was April of 2017. Okay, and their cost of revenues come down, and that's pretty substantial, which means their gross profit then has come up. 4 percentage points. That's a pretty big increase. One of those good things that I'm going to report about doesn't have anything to do necessarily with that 2015, 2016. It might a little, but maybe not a lot. Other operating expenses, though, those have tended to increase quite a bit. So they've saved some money here in their cost of revenue, but their operating expenses have gone up. But nevertheless, they've still been able to improve from 2013 anyhow. Their total, let me check here. Their operating income, well, they've improved it. That's what I was looking at, but just a little bit. And here again in 2015, look at that aberration there. Okay. So we're going to take a look at that. We come down, and I'm going to go back to the dollar figure because this is kind of interesting and it jumps out. All right, so we've got our operating income. Again, big jump there, but we had that big jump in revenue. Okay, so we can figure out why a little bit. Interest expense and those things, look at that. Wow, interest expense jumped up a lot. And now not so much here, but it jumped up there. Interesting. And then other income and expense, look at that change there from 2014 to 2015. Okay, and so the income went down. Here it bounced back up. Again, something happened, okay, and we come down to our earnings per share, 5.42 and a nice trend, 5.77, so the trend kind of continued, but then, what happened, right? So we've keyed in on something, okay, and again, don't let that distract you from reporting on some of the other things that are going on. There's some general things here that I would report on, right? I'd talk about their revenue growth, okay? As it turns out, we'll have some explanations for why it's growing, but make some notes. Again, you can expand your outline here and you can make some notes and we can talk, our revenue growth and our, look at that, our gross profit took a big jump, okay? We need to talk about that, but also our operating expenses. Okay, so I'd expand my outline a little bit and start figuring out the things that I'm going to want to talk about. I'm going to jump ahead. We'll come back and we'd certainly look at the balance sheet and maybe the cash flow. I'm not a huge cash flow guy, but we might come back and take a look at that. But then the next thing that I want to do is look at the annual report. Okay, and once again, I just kind of went I went to Bing. you guys probably use Google, and I just said J.M. Smucker's annual report. I click on that. It brings me, oh, that brought me something kind of weird. Mata, and that's not what I wanted. Let's try going back and try this again. J.M., what did I do wrong, man? J.M. Smucker's annual report. Let's click on that and see what happens. There we go. Okay. And look at that. J.M. Smucker Company annual report and products. Find an archive of the J.M. Oh, man. That's what I want, an archive of their annual reports. Because I want to look at that one for 2015 because something happened there, right? And so I've clicked on that. And you can see it comes up in a PDF format. If I were doing this report, I would download that PDF. Okay. And there you go. Okay. Now, I'm going to go back. I'm going to click up here to the very beginning. Theirs is a little different because their table of contents is right here. It took me a while even to figure that out. I'm used to seeing the kind of that classic old table of contents, and it wasn't there. And I came back and I looked. Oh, here it is. Okay, so it's going to tell me about their U.S. retail coffee. Page 1 is just a nice picture, right? Nice wholesome family, grandma and mom and dad and the 3 kids and the dog, and they're all out having, so what a great wholesome family. And here we go. But I come down and, oh, financial highlights. Okay, your guys' annual reports are probably going to have a more classic look to the table of contents, but in any event, financial highlights are going to start at page 24, and this is a financial paper, so that's kind of where I want to go and look. Okay, and so I'm going to click down, kind of follow along up here. 24, management discussion and analysis. Yeah, it's a little bit kind of strange the way theirs is set up, but anyhow, and so 24 doesn't quite hit it. It talks about forward-looking statements. This is where they do talk about their financials, but this stuff kind of talks about their accounting practices and some things like that. And it's when I get down to here that I actually get into the financials. And I'm going to shrink this a little bit because it's giving me 2 pages. That's why it's a little bit weird. 2 pages on one. I've got 46 and 47. So the way it's showing is a little bit different. And so, you know, I got statements of consolidated income, and I'm going to have a look. Let's just do that. So I got 2015, 2014, 2013. And it's 2015. It's kind of weird, and I kind of cruised down. My net sales were about the same. Cost of products, yeah, you know, changed a little bit. Gross profit, a little different. Boom, boom. You know, nothing. Okay. Oh, wait. Other debt costs, 173.3. Remember, 2015 was the year that we thought was kind of weird for some reason. And boy, does that thing jump out at you. You know, there was a few other things that were going on there, but look at that other debt cost, 173.3. Okay. Well, what happened there? Well, you know, let's cruise down and you know, I've already kind of looked through this and I've kind of found it, but you know, we got balance sheets, okay, and we'll go back and look at some balance sheets, so we might come back and see this, but you know, consolidated cash flows and shareholders' equity. Again, we may come back and look at these, but for now, let's just kind of cruise down because we've got these notes and this is where they tell us kind of what's happened. And so I want to take a look, and I want to see something here. Income taxes. I'm going to be kind of looking for that debt because that was a big deal, wasn't it? I got trade income taxes, trade receivables, inventories, derivative financial instruments. Wow, this gets to be a little bit complex, and it does. Okay, and we're going to actually end up talking about some of those derivatives maybe a little bit here. Okay, but that doesn't really tell me about the debt thing. Yeah, not yet. Marketable securities and other equity methods. Yeah, I know this is really kind of a pain, but we got to kind of come down and look at some stuff here. So, acquisitions, note 2. Okay, and yeah, again, I've already read through this, but it didn't take me that long. Okay, again, you get to the financial section and you're usually talking about maybe 15 or 20 pages, and you can kind of skim through it and maybe find out the stuff. And I hit acquisitions because 15 was a weird year. Some things happened, and then their income, their revenue, anyhow, went way up the next year. Maybe that could be explained by an acquisition. So on March 23rd, 2015, they completed the acquisition of Big Heart. Now remember, their year end is April. So this just barely happened in 15. So that's kind of interesting and maybe somewhat important. A Big Heart, a leading producer, distributor, it's the Blue Acquisition Group, Big Heart parent company. So it's some of those blue pet food things. Gosh, here's this company that does a lot of jams and jellies and that kind of stuff. They got all kinds of stuff, which is kind of cool. Which is things, of course, I talk about in the, talking about the company. And so we got just some, things here. Oh wow, look at that. We paid an additional $1.2 billion in cash, subject to working as a part of the transaction. New debt of $5.4 billion. Remember their interest costs borrowed, consisting of that and that. So those are kind of interesting. So we had some stuff going on in 2015, certainly. And I got to come over here to the next page, and I'm just scrolling down, and I've read through all this, and I've kind of looked at it. And interesting. But I read here, and it says, in Note 6, debt and financing arrangements and higher interest expenses associated with the bank term loan and long-term notes. Of these adjustments, the elimination of acquisition-related costs and other debt costs. So we got 108 was the acquisition-related cost. 173.3, remember up above, that was our debt costs, right? And they're non-recurring. So those are just some things that happen, okay? And it said about Note 6. So I got to come down. I'm going to go find Note 6, right? I got to scroll down. There's Note 3. I'm going to scroll down a little bit more. Note 4, Note 5, Note 6. And your guys won't necessarily be organized the same way. Okay. Well, Note 6, it starts to tell me about their debt and financing. Okay. And again, I read a few more things here. This gets a little bit confusing, okay? And if you get to this, you might get a little bit confused, and it may be a little more in depth than what we need to do for our report, but because we're talking about, wow, all kinds of some senior unsecured debts and what they've done with them, and on and on and on. But read those because they might help you to understand, right? Syndicate Bank, but I don't know that any of that had to do with the big deal. The acquisition certainly did. Okay, and Note 6, and I come down. Oh, yeah, there was some stuff here that talked about it. Wow. Interest paid total 99 cents. This differs from interest expense due to the timing of payments, amortization, our debt instruments contain. Okay. Now I lost my spot here where I had the important information. Here we go. Okay, on March we completed the senior notes due beginning March, and you can read along here. Of course, you guys don't need to because you're not doing Smucker. But here, other debt costs of 173.3. So I was kind of honing in on that number a little bit. On the statement of consolidated income consists primarily of make-whole payments and bridged loan financing fees offset by the write-off of the remaining fair value interest rate swap gain. And so those are, gains and derivatives and those types of things. A little more complicated than probably we need for this particular class. You probably got to take a master's degree class in finance because I honestly don't know a lot about interest rate swap games. I kind of understand the basics of it, but barely. Okay, but I know that here in 2015 that 173.3 was a big factor as to why, right? Switch this back to dollars. It was a big part of this. They've had 49.15, no big deal. So that 173.3 was the big part of this. And then I also know that the reason our interest expenses went up was because we incurred some more debt when we made the purchase of that Big Heart company. And that's what increased our revenues, right? this is where I get at with the financial analysis. By looking at the simple financial statements, I kind of got an idea something was going on, but I had to go and read the annual reports and figure out what that was. Okay, those financial parts are important, you know, and again, I might come back here and I might take a look at the balance sheet too, because that's going to be important, right? Because guess what? From 2015 to 2016, I got to believe that my long-term debt went up substantially, and maybe my short-term debt a bit too. Here's total current liabilities. Well, from 15, 16, 17. Look at that. I've had a pretty big increase in short-term liabilities. Look at this jump in my total non-current. So we took on, and that explained that to us, right? $5.some billion in long-term debt. Okay, here it's about $4 billion, but we had some other things here, deferred tax liabilities and whatnot, all related to that acquisition. And then, but look at that. Boy, we knocked $1 billion off. We knocked almost another $1 billion off. Of course, we increased our short-term debt a little bit, but we've knocked it off, you know, in the last couple of years. And so those are good things, right? Okay. Total stockholders' equity also took a pretty good jump from here to here. Okay, stayed about the same. It's actually decreased a little bit these last couple of years. So that's a little bit of a concern. So I can rattle on. Okay, I can get into this. I can kind of look at these things. Yes, I bounce back and forth a little bit, but that's how you get the basics then of your report, of your analysis, is you do that. And you should be taking some notes here about some of these things, some that are more important obviously than others, and maybe you'll scratch out some because time won't allow, but it ought to give you a pretty good basis for writing a good financial report. Okay, and that's just the one annual report. Guess what? I should look at 2016s and 2017s. Granted, this one really jumped out at me, and so I'm going to make that probably a big part of my report. But I would sure click on 2017. I'd open it up. Okay, and I'll come down. There's some of the brands that they own. Look at that, quite a few, right? Kind of cool. Here's some more of their brands, right? Okay, then where was that table of contents? They always get their table of contents. They just hide that thing on me. Man, oh man. Did I miss it? I must have missed it, or else it's still coming up. So they really they're doing a lot of advertising in their annual report, which is all right, but man, oh man. I got to find their table of contents. I know the other one started about page 24, so I guess if I don't find their table of contents, I'll jump to they even put some recipes in there. Look at that. But there's the basic financial review. That's a lot of the same information that I'm going to see in the Morning Star, right? Stock price data. Again, I'm not concerned about stock price. Okay? Management discussion. Here's something that you ought to read, okay, for sure. This is going to give us an idea, right, of what management thinks is going on. There's probably going to be some good financial stuff, you know, that in here that's going to lend good value to your report. And here we are on page 24. So we probably are getting to the financials too then, right? Okay. And summary of 17, summary of 16. So, boy, some cool things that I can read about. They're still talking about that Big Heart acquisition, you know, a few things related to that. Okay, how I could fit all this into 5 pages, I don't know. And actually, for the financial part, I'm only going to have a couple pages. Right? There's just way more here than what I can analyze. So I'm going to have to start writing some things down. I might have to start crossing some things out and just paying attention to some of those more important things. Okay, don't neglect the basics. Right? Revenue growth. Equity growth or decline, okay, gross margins, growth or decline, things like that. Don't neglect those, but then also look for these particular things that might jump out at you, like in this case, the acquisition. I better quit. I could rattle on forever, and I've already taken 25 minutes. I hope this gives you an idea of some things that we're looking for. Thanks and good luck.